All right. So, Andre, you put up a post back in May that I thought we needed to do a deep dive on, and the gist of it was, you always say you can't do everything for everyone. You can't be all things to all people. But after that post, I thought, you know what, we can do a lot of things for a lot of people. Wouldn't you agree?
Yeah, agreed, BA. Thanks so much for having me. Excited to be here. And as I was reading this presentation, I think that I even reminded myself of like why I love being a broker in terms of where we can help people and all of the amazing products that we have. So this is such a great topic.
Yeah. So this was the post, and just starting off, sometimes I take for granted, number one, that people know what I do, and number two, where I do it. So I wanted to make sure we were specific about the places we can lend in, because it's also going to be important for what we talk about, because we have kind of an expanded list, correct?
Yeah, absolutely. And especially like you said, like just where we can help people, if we're not staying top of mind or if we're not letting people know, people just, either I take for granted or they take for granted where they can get help or how I can help people.
Right. So the second asterisk you had there was a past client wants to start investing but doesn't want to show income or pay stubs, just wants to qualify based off of the rent, covering the mortgage, and wants to put it in the LLC. And you said, yes, I can help with that. So we are going to start with that program. And that was just summation. And uh, people are, usually W-2, 1099, they get qualified based off of these things. And I really, just to go back into the history, when people see the slide, they think, oh, no doc, stated loans, 2000, early 2000s. That's how we got into the crisis. But
Yep.
what happened was, just going back on the history, before you and I got in the business over 20 years ago, those entrepreneurs, when they had to get a loan, they would have to bring a whole stack of paperwork to get the loan approved. So smartly, with the lenders were allowed to do what's called stated loans or low doc or no doc loans, so that they didn't have to supply so many things. Because if you're a smart capitalist, you're not showing your total income as an entrepreneur, because you're going to have to pay the tax man. The one way that hurts you is if you're trying to buy a home. Um, so because they started getting a little carried away with these no doc loans. And the big issue was they were starting to give these to people that had like low credit scores, which is a good way to predict whether people are going to have the ability to pay, which is what it's all about. So because of what happened in 2007, 2008, because the industry just got so out of control, if you had a heartbeat, you were getting a loan. So they have raised the standards of that. And in general, you better have a 700 score if you want to think about doing these kind of programs. Any thoughts on that whole history part of it?
Yeah, like you said, I think when we start talking about, no W-2s or no income, people start talking about 2000s. But like you said, we've gone past that and now this program here, which I love to call the no income, no job, no problem loan, is really popular with people who don't like to report income to Uncle Sam.
Exactly. So who exactly qualifies? Here's the list here, and I think the one I think all of them are very enlightening for a lot of people because I often get, can I put it in my LLC? I don't think a lot of people know you can go up to four borrowers, and even first-time investors, because there are some programs which we'll talk about down the road here. Um, there's some high standards if you're a lot of times they don't even want first time investors, right?
Yeah, this product particularly that we're kind of talking about here is a DSCR HELOC, and a lot of people kind of raise both of their eyebrows at me, and they're like, "What?" But it's basically just a home equity line of credit that is the qualifying is based off of the DSCR.
Right. And these three, and we'll go into what that means, but these are the three things that qualify a person. Your credit, the cash flow or the DSCR, and how much reserves you have, depending on how we're going to structure the loan. So DSCR is debt service coverage ratio, and just talk about that a little bit.
Yeah, so people are always we in mortgage terms throw out the word DSCR, but a lot of people don't understand that. And it just means debt service coverage ratio, right? So does the mortgage basically cover the debt? So you put up this great example. If the mortgage payment is $1,000 and the appraiser says that it could rent for $1,000, that would be what we in the mortgage world call one for one, right? So one covers the other one. So that is black and white what DSCR stands for.
Yeah, and it can go higher or lower based on the program too,
That
as
is
low as
correct.
0.75.
As low as 0.75. And again, I think you and I could talk about millions of avenues, but there are ways that the lender doesn't care what the DSCR is.
Correct. So just so people know, that's when we say DSCR, that's what we're talking about.
Yeah.
And these are the features. The number one being, as you mentioned, it is a home equity line of credit. So it's
Yeah.
going to be interest only, 30-year fixed term. The line there's going to be the line of credit has a 3-year draw on it, which explain that part of it.
Yeah, so again, this product that we're specifically talking about, the DSCR HELOC, is such a great product for investors in terms of, I have investors who they're either purchasing properties or they're refinancing properties that don't have any liens. And basically, for the first 3 years, you can pay off that line of credit and then use it again, right? So, for instance, I have an investor who says, I have this property, I want to take some cash out of it, but I've got $40,000 coming in 6 weeks. Can I pay some of that off? And then can I use that money again to take money out of that home equity line of credit to do other things with? So, again, it is a line of credit on your investment property essentially, and you can draw on that line of credit for 3 years. And then after that, the bank wants you to start paying it back. So it's a
Right. And one of the ways people start paying it back even before the 3-year term ends, I would guess, is to get ahead of it, is they're collecting rent that's going to give them a positive cash flow, and they're throwing that towards the principal.
You got it. Yes, sir.
All right. And that last part is probably just as important as the all the other details. It's a first lien position. Most people think of a home equity line of credit, they think it as a second lien, but this is a
Yeah.
first lien position.
This specific product that we're talking about is a first lien position only. If you're interested in a second lien position product, you can talk to BA about that too. We do have some other second lien positions for primary residences, second homes, and investment properties. So if you're looking for a second lien, we do have those products, but this particular product is a first lien position.
Absolutely. And I actually find that if you're an entrepreneur, this is a better way to go than it's the second lane position. Sometimes there's a lot more hoops to jump through. So the whole idea is to make it easier for investors to start accumulating properties and that no prepayment penalty. In case someone doesn't know, oftentimes that's put on a property on a loan so that if you pay it off, that means the bank's not able to make money off of it. So they'll pay you a one-time prepayment penalty, which is a percentage of whatever's on the balance. So that's one of the great things about this product. There is no prepayment penalty. Some of the other features, you can use it at purchase or refinance. I love that loan limit there, the top end, $3 million.
I know. I mean, there are absolutely some monster properties out there that even if you finance it at 9, 10% at 3 million, it's still going to cash flow. Like there's some, really nice properties out there for up to 3 million that you could do this with.
Yeah, and then on the refinance side, it's like there's an opportunity for you to refinance. Maybe you have a investment property that you've paid off, and you want to buy some more investment properties.
Yep.
That's a great tool for the refinance side, and that includes the Airbnbs and the VRBOs. I know in State College, and especially down here in Pinellas County in Florida, there are a ton of properties and neighborhoods where people they have their main house, but then they either convert the garage or they have another structure that they're renting out because You know, a lot of people like to be down here in the sun. And then the property types, you can do single family residence up to 4 units and warrantable condos. And then there's also some loopholes even with the non-warrantable condos that we don't necessarily have to get into, but just know that that's out there. And I'll let you handle the disclaimer on this. I stole this exactly from your presentation,
Yeah.
but just to
Uh,
give people an idea of where the rates are.
yeah, so everybody, you pitch out the product, and then obviously the first question everybody asks, well, what are the rates on these? So first of all, this is not an offer to lend. You must apply with BA for it to be a valid offer to lend. But because this product is offered in Puerto Rico, we did put up some Puerto Rico examples here, but you can see, the first example is a purchase. If you're looking in Puerto Rico, you can see that the obvious rate is about 11.75. But if we're in Florida or any other state, you could see that the rate is 9.25, which to me is super excellent. It's way better than hard money. And like we keep on saying, it's a home equity line of credit on an investment property. You just don't find that these days. So if you're a smart investor and you know how to invest, it's a really great product. The second example we gave is another purchase, just a little bit of higher purchase price, a little bit of lower loan to value, and maybe if you have a little bit of a less credit score, again, you can see the rate there in Puerto Rico is 11 and a half, but if you were to do it in Florida or anywhere else on the mainland, it's 9%. The third example is a lower loan amount, and it's actually a refinance in case you have a property that you own free and clear and you wanted to refinance it. We did it at about a 60% loan to value and 700 score. You can see that the rate again in Puerto Rico is 11s, but again, on the mainland, it's still in the nines. And then the last example we gave, that's actually supposed to be a refinance. I didn't put I put purchase on it, but it is supposed to be a refinance example. Again, I wanted to give a refinance example of a high loan amount, high credit score, and you can see again the rate on the mainland is about 9% on a HELOC for an investor. So those are some examples of what the rates look like for you.
For someone who may be thinking about investing for the first time, whether it's this product or another, like the interest rate is important, but because it's an investment property, you're going to be running the numbers before you even think about doing this to say, is this, if I have this interest rate, there's a way to have a positive cash flow, even though the rate is higher than a conventional loan, because it's going to be in the rent.
Yeah, absolutely. That's a great point. Usually what happens with these types of clients is they call us up and they say, what would the payment look like on this? And then, I mean, most of the time they're like, oh, the payment's $1,000. I'm collecting $1,500 in rent. Like, yeah, I'll take that, $100,000 in cash and I'll go buy another property or I'll go fix this one up. So, absolutely, definitely want to run the numbers.
All right, so here's where it comes in. Although we're licensed in all the other states we mentioned at the top, because of the structure of this loan product, we what is this like 30 something, 35 maybe states
Yeah.
added?
Yep.
Yeah,
I
so
think it's a little over 35 states, but it is considered a business purpose loan. That's why it can be for investment only. So if you're located in any of these states and you know BA, definitely make sure to reach out because we can help in more states than just the ones that we're licensed in because these are considered commercial loans, business purpose loans. So we certainly would love an opportunity to help you if we can help you in any of these states. And
yeah, I mean, there's nothing not to love about this. When you put out there that this was, you know, out, I was like, wow. And then this is like the final piece of this one loan product is delayed financing. Explain delayed financing.
yeah, so this is another great one, and especially the market that we've been in, or the markets that we've just come out of, or the markets that you're still in, depending on your market, because every market's different. Some investors have had to say, like, hey, I have $200,000 cash, and the seller wants a quick close, or they're competing against other people, and cash is the only way to go. So what we tell the client is go ahead, pay cash for it, and then the very next day we can refinance you and we can give you 70 to 75% of that back. And it's perfect. Then it's a win-win for everybody. the buyer then, yes, they're going to use their cash, but they win the offer, and then within 30 days, we can give them back 75% of that. And so that's what delayed financing is, just paying cash for it and then us giving it back to you. And that's really winning a lot of things right now, especially in the market that we're in. People want cash, want quick closes. So the investors say, hey, I'm willing to pay cash. And then we come in and we give them 70 to 75% back.
Yeah, and some of the other products that investors use, the delayed financing isn't allowed. It usually has to be what, 6 months, 8 months, 9 months, something like that.
Yep, yep. So if you're, trying to do some of the other products, they normally want you on title for 6 months.
Got it. Got it.